Okay, so we are going to start. Today we are looking at the statement of profit or loss, as mentioned earlier. The statement of profit or loss, this basically, it's able to summarize to you. It's able to show you the performance of a company, okay? The performance of a business, because you're able to see the revenues during the period, okay, the revenues during a certain period, and then you're able to see the expenses that business have incurred during that same period, okay. And from it, now you're able, once you take the revenues, you less the expenses, you are going to get the profit that business has earned during the period. That is the profit or the loss, okay. They could make the profit or loss. If the revenues are more than the expenses, that is basically a profit. If the expenses are more, that is basically a loss, okay. So that is basically what the statement of profit or loss basically shows, the performance of a business. Remember yesterday we looked at the statement of financial position, okay. The statement of financial position basically shows the financial position, okay. But the statement of profit or loss, it shows now the performance of a business. So when you go, let's say when you look at a public trading financial statement, when you check the statement of profit or loss, you're going to see the revenues that they have made during that period. The revenues are basically what they have gotten from selling whatever they're selling, whether they're selling the goods or services. That is what they get is the revenues, and then the expenses are these the things that they incur to be able to get this revenue, okay. So for example, you see when you're selling goods, when you're distributing, for example, cups, let's say for example you're distributing cups, you're going to incur the cost of buying those cups. That is what we call the cost of goods or cost of sale, okay. That is the initial most direct cost that comes with revenue. That is the buying of inventory. The buying of inventory itself is an expense that you have incurred so that you can be able to get the revenue, okay. So this revenue is the sale, okay. There is sales revenue. You could get revenue from other ways. You could get revenue as well from, maybe you received a discount, okay. Something we call a discount received. When you receive a discount, then you've also you've gotten another revenue, okay. So basically the most direct expense that you incur first so that to get revenue is this cost of goods, or rather cost of sales, okay. So let us use an example. To get to prepare the statement of profit or loss. But before we get there, remember the accounting cycle, okay? After you record the transactions as they happen, what do? You pass the journal entry, okay? You pass the journal entry. This is to record the transaction that has happened, okay? So every transaction that as it happens, you look at the document, the source document, and then you pass a journal entry. And then you come and this is then posted in the ledger. The ledger just summarizes into the accounts, okay. So you are able to check if this is the rent expense account, this is a sales account, okay. So you can look at the summary of transactions in each specific ledger, okay. So once you get there, you're able to check as at a particular point in time, for example, as at 31st December 2025 or whichever period, you're able to see the balances of each account, and from it you're able to prepare the trial balance, okay. The trial balance is basically going to show the balances as at a particular point in time, okay. So in this case, you're going to have the trial balance, and then you usually need to go, in case the trial balance is not balancing, remember use the trial balance, the the debits are usually equal to the credits. Okay, in case this is not the case, you you pass this difference in a temporary account called the suspense account. Okay, the suspense account, till you get to understand what is causing this difference. Mostly either you over debited another account or over credited another account. So you check it and you correct it. Okay, once you correct that, then and you see you don't have any other errors, you also look at the period and you look at the period and adjustments. You look at the period and adjustments. These adjustments are there mostly because we use the accrual basis of accounting. Remember, in accrual basis of accounting, you have to look at the accruals. That is, check for accrued expenses, accrued income, the prepayments. Okay, make sure these are catered for at the end of this period. What have we accrued? Okay, what have we prepaid? And then another thing we look at, especially if for a business that is operating on credit basis, we look at the allowance for expected credit losses. Okay, so in this case, you make sure you have all these period end adjustments. Another one is the depreciation. You have the depreciation as well. All these adjustments, once you do them and you pass journal entries to record the adjustments, what do? Now you are able to get the adjusted trial balance. Okay, the adjusted trial balance. Now this trial balance will have even those adjustment that you have made at the end of the period. That is, if it is depreciation, you have the accumulated depreciation. If it is the prepayments, the accruals. Okay, for the people who are live here on TikTok, I'm streaming on YouTube. That is how you're going to see my screen. I'm streaming on YouTube. It is the only place I can share my screen, so you can just join via the link on my bio. Okay, I'm streaming on YouTube. Okay, so here we are going out. We have the adjusted trial balance as at this point where we have passed the period end adjustments. And then after that, we are able to come up now with the statements. In this case, we start with the statement of profit or loss. Okay, so the statement of profit or loss, as I mentioned, it takes the performance of a business. Okay, the performance of a business. So in this case, we are looking at the revenues. We are looking at the revenues during the period, then we less the expenses during that period. Okay, so as you can see from this adjusted trial balance, you can see there is an account on cash, bank, account receivable, inventory, prepaid insurance. These go to the statement of financial position. These go to the statement of financial position as well as the office equipment. When it comes to the statement of profit or loss, we are looking at the revenue and sales. Okay, revenue and expenses, sorry. So in this case, what is the sales revenue? You can see here we have a sales revenue of 330,000. So let us look at the structure. Let us look at the structure of the statement so that we see how we're going to arrange these items. So normally, make sure you indicate the name of the business, the specific statement you're looking at, and the period. Remember, for this statement of profit or loss, we are looking at during a certain period. Okay, we are not looking at a particular point in time. No, we are looking at during the period. These are the sales during the period. These are the expenses during the period. In this case, we have, now let's start with the first item we should have. It is the sales revenue. Okay, sales revenue. In our case here, the sales revenue is 330,000. And then from there, we less cost of sales. We less cost of sales. We less cost of sales. Cost of sales, actually, when we less cost of sales, we are able to get the gross profit, okay? What is our cost of sales? We are given here the cost of sales as 220,000, 220,000. Remember, in some instances, they won't give you directly the cost of sales. No, they are going to give you the opening balance, okay? The opening inventory. They're going to give you the opening inventory, okay? And then they give you the purchases made during the period, the purchases that have been made during the period, and the closing inventory, okay? The closing inventory balance. And to be able to get the cost of sales, what basically you need to do is take that opening inventory, take the opening inventory, and then you add the purchases that have been made during the period, and then you less the closing inventory. That should give you the cost of sales, or rather the cost of goods, okay? So you less the closing inventory. So in this case, we have already, because you're looking at the adjusted trial balance, this has already been done. So we have the cost of sales as 220,000, okay? So here we are going to have, when we take the sales revenue, we less the cost of sales, we usually get the gross profit. We get the gross profit, which in this case is 110,000, okay? $110,000, okay? So that is a gross profit. What is the next section we look at? We look at the expenses. Remember, it is revenue less the expenses to be able to get the profit during the period, okay? So in this case, we have two breakdown of expenses, either the selling and distribution expenses. These are the ones that are directly involved in the selling and the distribution of the goods or the services. And then we have the operating or administrative expenses, okay? So in our case, they are not you can't distinguish, because for selling and distribution expenses, you need to be able to see whether it is transport expense. You're told that this is what is used to deliver the goods, so that is directly distribution of these goods or services, okay? So in our case, we are going to have administrative expenses, or rather operating expenses, okay? And we have let us list them. We have here salaries, okay? We have salaries. You see, to be able to understand the difference between the two, we are saying, let's say if it was indicated that these salaries are for salesmen, sales people, then this is basically going to be selling and distribution expenses. But if it is not directly stated, then these salaries expense, you're just going to treat it as administrative or operating expenses, okay? So here we have salaries, and salaries we have 45,000. Remember, for this one, always indicate less here. So even at the cost of sales, you indicate with the bracket to show we are lessing, okay? So for salaries, we are lessing 45,000, okay? Then for rent, we have rent expense as well. That is another expense. Another operating expense. We have here, we have 18,000. So we come and indicate a less of 18,000. Then we have utilities expense. That is another common operating expenses. Or utilities is, for example, the water you use in the office, the electricity you're using. That is what you're calling utility expenses, okay? So utility expense here, we have 7,000, okay? So we less here 7,000. 10,000. Okay, then we have another one, which is insurance. Also, it could be insurance for motor vehicle, it could be insurance for employees. This is another operating expense as well. So we less again 5,000 from our trial balance. We have 5,000. Okay, then what else? We have a depreciation. Remember, one of the things you're doing at the period end is making sure you're doing the adjustment for depreciation, so that you are able to get the net book value of your assets. Okay, so depreciation expense here, you have 10,000 during the period, so we can include that as well. So here we have depreciation expense, so that we have 10,000 as well. So we less here 10,000. Okay, so do we have any other expenses? Let us look through. So accumulated depreciation, this one is going to be used in the statement of financial position. That is you're going to take the buying price of this equipment, for example, because it is the only current asset that you have here, or rather PPE. We less this 30,000, so that you are able to get the net book value of your asset. Okay, your PPE in this case. And then the account payable, bank loan, accrued expenses. Remember, these are account balances that will go to the financial position. These will go to the financial position. These are liabilities. Okay, these are liabilities. Then we have capital, retained earnings. These will go as well to the financial position as equity. Remember, we looked at the financial position yesterday, and the financial position usually shows the assets, liabilities, and equity. Okay, so these ones will go to equity. So in our case, for the statement of profit or loss, we are looking at the revenue during the period, which we have included. Okay, and then you're also looking at the expenses during the period. Okay, so this is what the sales and the expenses is what that are going to go to the statement of profit or loss. Okay, you can see these others, they are going to the statement of financial position. As remember, these are assets. Okay, so here we have, so let us sum what is our total administrative expenses. What is our total administrative expenses? Total administrative expenses, here we're going to have a total of 45,000 plus 18,000 plus 18,000 plus 7,000 plus 5,000 plus 5,000 plus 10,000. Okay, so that one is going to give us a total of 85. Is going to give us a total of 85,000. Okay, so from there, once we have listed our the sales revenue, we have less the cost of sales, so we have our gross profit. What do? We are able now to get, we can see from our adjusted trial balance, you've not been given much. That is we've not been given the tax expense or anything from the investment side. So at this point, we are able to calculate our operating profit. We are able to calculate our operating profit. Let me use another color here. So we are able to get the operating profit, which is basically the gross profit less the total administrative expenses, which is going to be 110,000 less 85, and this is going to give us 25,000. Okay, so normally if we have you're going to find operating profit is also called the profit before tax. Okay, depending on the scenario, or rather, is it a sole proprietorship, is it a company? Okay, so in this case, if we had tax, we would come and put here the income tax expense. Okay, we less the income tax expense, or then we're able to get the profit for the year. In this case, because you don't have the tax here, we're just going to have this 25,000 as our profit during the period. Okay, so during this period we've had a profit for the year as just 25,000. Okay, so this is how the statement of profit or loss is usually planned. Okay, you're able to follow from the beginning, how we look at the sales, the expenses that have been incurred, okay, till the end. So this is basically the structure of the statement of profit or loss. Okay, so with that, that is for today. I'm going to do more examples on these scenarios, and also next we'll be looking at the statement of changes in equity. Statement of changes in equity for the people who are currently viewing from YouTube. Hello, I've seen, can see the Samuel say hello if you're still viewing there, if you're still viewing from YouTube. Any question? Any questions before we end our stream from there? To the people on TikTok, you always can find me from on YouTube. Okay, I usually stream from YouTube. For the people on YouTube, any question before we end it there for today? Feel free to chat on the top chat before we close. In case you have any question. For people on TikTok, I usually stream from YouTube. I am streaming from YouTube. So all to find me, just go to the link on my bio. I'll stream there from Monday to Friday. You find me live at 8 p.m. East African time. And for during the weekend, that is Saturday and Sunday, you'll find me live, that is on YouTube at 3 p.m. Okay, so with that, if there isn't any further question, I will end it there for today, ma'am. And for the ones live still on YouTube, that is the end of the class for today, and have a good rest of the day.